Welcome to this explainer. You open up social media today and boom, you're instantly bombarded by this relentless flood of get rich quick content, right? Flashy reels of teenagers supposedly making millions in literally minutes. Well, today we're tearing down that illusion. We're going to dive deep into the data to uncover the hidden and honestly often devastating reality of futures and options trading, or FNO. To really grasp the gravity of this trap, we got to look at a pretty massive number: 93%. Official data from the market regulator, SEBI, reveals this staggering reality that 93% of retail traders in the F&O market are actively losing money. And listen, we aren't talking about spare change here. We're looking at a collective wipeout of 1.8 lakh crore rupees. I mean, that is an incomprehensible amount of wealth just vanishing into thin air. To ground all that massive financial data, our source material introduces us to a super relatable cautionary tale. Meet Ramesh. He's 19 years old, a college student, just hanging out in his hostel bed watching these exact trading reels we just talked about. Naturally, he starts to feel like, hey, everyone else is getting rich, I'm missing out. So he starts small, makes a tiny profit, gets this massive dopamine hit, and then he goes all in. He puts his entire college fee and hostel rent into one single trade. The screen blinks, the market crashes, and in literally a matter of seconds, it's gone. The whole shebang, his entire tuition, just wiped out. His heart is racing, and he's left wondering how on earth he is ever going to face his family.
Okay, let's dive into this. Part 1, the iceberg of F&O trading from history to hype.
So Ramesh's story, that's really just the tip of the iceberg. To truly understand this trap, we have to look back at what futures and options were actually designed to do in the first place. Get this, 4,000 years ago in the dusty markets of Mesopotamia, merchants and farmers struck a very specific type of deal. They'd fix the price of their crops before they even grew. It's brilliant, right? This practice survived the fall of the Roman Empire, was picked up by Byzantine traders, and eventually evolved in Renaissance Europe, where these contracts were listed on formal exchanges. Fast forward to today, and modern India has somehow become the world's largest derivatives market. But the original intent behind these tools, it's been completely lost in translation. At its absolute core, a derivative is simply a financial contract. Its value is derived from an underlying asset, things like crops, gold, or stocks. Think back to that ancient farmer for a second. He locked in a price to guarantee he absolutely wouldn't go bankrupt if the market crashed. And the merchant? Well, he knew that if prices skyrocketed, he'd still get his wheat at a fair price. You see, these tools were built to act as a shield to minimize risk. They were never meant to be a casino to multiply it. Now, there are two main ways this works. A forward or future contract is an ironclad obligation. When the date arrives, you gotta execute the deal, no matter what the market is doing. But an option contract, that's a bit different. It gives you the right, but not the obligation. You pay a tiny fee, a premium, and if the market turns against you, you just walk out the escape hatch. You only lose that small premium. But here's the catch. That exact escape hatch, the ability to control massive amounts of shares for literal pennies, is exactly the leverage that's trapping today's quick money seekers. The truly terrifying part is the sheer scale of what this has become in India. The disparity is just mind-blowing. The traditional equity market, where people actually buy and hold shares, sees a daily turnover of about 1 lakh crore rupees, which is massive on its own. But then, look at the F&O market towering next to it, 330 lakh crore rupees daily. It dwarfs the actual stock market by a multiplier of 300. It's crazy. We're looking at the largest derivatives exchange in the entire world, operating in a country where the financial literacy rate sits at only about 27%. So you might be wondering, where is all this money actually going? Well, that 1.8 lakh crore rupees lost by retail traders didn't just evaporate into the ether. The F&O market is what we call a mathematically perfect zero-sum game, meaning for every single rupee a retail trader like Ramesh loses, there is a highly sophisticated player on the exact opposite side of that screen who just won it. Let's take a closer look at who you're actually playing against here. Because honestly, it's a hopelessly unmatched fight. The everyday trader is sitting there on their phone, manually swiping, basically running on hope and emotion. And on the other side, billion-dollar institutional firms running high-frequency algorithms that execute thousands of trades in a literal microsecond. They control about 70% of the entire market. The result of this mismatch? The average retail trader is losing roughly 2 lakh rupees, while those top institutions are quietly pocketing an estimated 735 crore rupees every single day. You're essentially bringing a wooden sword to a laser fight, guys. Which brings us to a much darker layer of this whole thing. Our source material highlights this 20-year-old BTech student who lost 46 lakh rupees. He had absolutely zero income. He borrowed from his parents, his friends, even those sketchy loan apps. He lost it all. And yet, he told his accountant he simply couldn't quit. Why? Why do people keep hitting buy when it's actively destroying their lives? Well, the answer is actually wired right into our biology. It's called the dopamine loop. Now, we usually think of dopamine as a reward chemical, right? But actually, scratch that. It's more like the anticipation chemical. Your biggest dopamine spike doesn't happen when you win the money. It happens the exact millisecond before you click buy. It's all about the thrill of the potential jackpot. So even while you're bleeding money, your brain spikes your dopamine, convincing you that the very next trade is going to win it all back. It creates this vicious, completely unbreakable cycle. And here is the kicker. Modern trading platforms know all about this, and they've totally weaponized this biology against us. They've essentially built a casino right in your pocket. These broker apps are deliberately gamified. You've got instant one-click execution, which leaves you with zero friction and barely any time to logically think through your financial decisions. It's a high-risk, high-reward structure designed specifically to feed that dopamine loop, constantly selling you the illusion of an instant jackpot. It's literally operating on the exact same neurological triggers as a casino slot machine. Okay, so how do we fix this? Part 2, escaping the trap and breaking the cycle of loss. So, if the system is mathematically and psychologically stacked against us like this, how on earth do we break out? Well, here is a concrete lifeline for anyone who recognizes themselves, or maybe someone they love, in Ramesh's story. Step 1, awareness. You have to recognize this dopamine trap for what it is and accept that you might be fighting a biological addiction, not just making some bad math choices. Step 2, strict risk limits. You gotta set ironclad boundaries. Never ever trade with money you cannot afford to lose, and seriously never borrow to trade. And step 3, deep literacy. We need to accept that the market is a complex science of endless data. It is absolutely not a lottery ticket where you can just guess your way to millions. I want to leave you with one really provocative thought from our sources today that just perfectly summarizes everything we've looked at. Relying on luck without skill isn't trading, it's gambling. Look, this explainer wasn't designed to scare you away from the markets forever. It's really just to force an honest reevaluation. Are you carefully managing risk like those ancient merchants did, or are you just pulling the lever on a digital slot machine? The path to true wealth, it requires patience, knowledge, and skill for sure. Don't let the illusion of a quick win blind you to the reality of the game you're actually playing. Take a step back, educate yourself, and protect your hard-earned money. So what's your next move going to be? Until next time, stay curious and stay focused.